Cool. So I thought I'd make another video on stochastics. So the stochastics tool is a momentum oscillator that measures the closing price of an asset compared to its price range over a set period of time, which you can see at the bottom. The indicator gives a value between 0 to 100, with the readings of 80 indicating overbought and 20 as indicating oversold. It's used to identify potential buying and selling opportunities based on the market movements, and I think trading stochastics is very much similar to the RSI, and you can also get an RSI stochastic indicator where they're kind of combined, but essentially they're doing the same thing. So this is a mistake that I made a long time ago as well, is I would have both stochastics and relative strength index open at the same time, and not realizing that they both present you with the same data. So understand that when you are stacking confluences together and you're having loads of indicators, some of the indicators can give you the exact same data, so it's not really giving you multiple confluence, it's actually giving you the same confluence. So if you haven't seen the RSI video, definitely just checking that video out. But with this one, it's definitely one that I preferred over the relative strength index, in my opinion, over a period of time. So it's basically explained that. So you have 0 to 100. Of course, it can go into minus and so forth, which happens on exceptional times. Essentially, how we look at it is when price comes to the bottom, we look to buy, and then when price comes to the top, we look to sell. Now, they are usually very short-term movements, so don't expect to get into the price movement and then, essentially, be into a trade for quite some time. So obviously we know how this is going to play out, but I think it's just a good example of taking the stochastic and trading it within a structure. So I'm going to play this out ever so slightly, and we can see that we're in the oversold bit. So as we're in oversold, we would put a buy position in here. I guess it doesn't really matter how much it is, so we'll put a buy position in there and then we'll let it go, and then essentially that would have taken us out for a break even at that point, or a loss. So let's just say that it's closed there, and then we'll go for the next one, and then over here we're still there. So we've basically tapped into this point here, and now we've pushed away. Essentially you take another buy, and then you'd mitigate your risk down there, and you'd go in, and then now we've reached this point, we would close our position and then take a profit there. So there's a small profit there, and then we would basically play that out, wait for it to come back to the bottom, and we did tap into the bottom, but I kind of missed it, so I'll just replay that quickly a little bit back. And that's the thing, you definitely need to be on your management game here as well. So we can see here, and we definitely spiked in all the way down there. We do need to wait for it to cross back over, and as we can see, it crossed, so you can open a buy position there, and then we'll play that out. And then as we can see, we've now pushed up, we wait for the crossover, and we're just about to tap into it but not quite, and now we've crossed it, we can sell that position. So we made another profit there, which is absolutely great. And then essentially these are daily candles, so there's more than enough time to manage this and wait, because you're waiting for the candles to close, which is the most important thing. And then you can obviously manage it as you please. Obviously, we give it some time to play out. Now over here there's another buying opportunity, so we'd buy that, and then in this case we could say that that's a break even, so we would close that one and we'll wait, and essentially now we're back at the top there. I guess it's gotten a little bit messy, so you kind of have to look at what you're looking for, and I think at this point here you'd be looking at something in the region of this. And yeah, we'll just keep playing it. And now that we've tapped into this zone here, because obviously we don't just get caught up on the bottom here, we have to look at what's actually happening with price. We've tapped into the high. You could look for a counter good position for a sell here, and then just hold it through. And then yeah, now as we can see, we're at the bottom of the stochastics here, and it's getting very messy. We can have two options because we've tapped into this, and we know that on the high time frame we may be looking for the short, so you could come out, but with this strategy you wouldn't know what to do, so you would come out anyway, which is one of the reasons why I left it. and then essentially, you know, you would have missed out on this profit here, and maybe you'd eat yourself about it, you know, who knows. And then the thing about it is, at this point here, you'd think, okay, we're back up, so let me sell. If you knew your technicals, you wouldn't touch that, but you wouldn't, and then you would take this unnecessary loss here, and then you would take that loss, and then you'd keep going, and then thinking, okay, well, I'm going to wait for it to come down, and then it doesn't come down and it goes. So that's something in itself. But yeah, there was a few profits there, but there was definitely some losses there that I think if you had some more knowledge about just generic charting and price structures and trading, you could have made a lot more money. For example, we made a profit from here to here. I think we made a break even over, or we made a small profit or break even over here. We made a profit over here. Yeah, we made a profit over here. We shorted it here, and then overall, so we made a total of 46 Australian dollars. If I'm correct, I'm not too sure. I wasn't keeping track, but you know, as you saw, that was a course of this little period here. So let's say from when we started trading to when we didn't, it was 125 days. So obviously you might be trading with a different size account in terms of percentage. I wasn't keeping track, but just wanted to basically show you how this particular tool works. And it was quite fun to actually use this little backtesting feature here with money. So tell me what you think. You know, stochastics, I definitely think it's a very good tool. There's definitely potential there to make money. It's just something that I don't trade with anymore. I used to trade with it, and this is how I used to trade with it. So have a nice day. We'll